Hello there. I hope that you're doing well. Welcome to this new trade breakdown lecture. In this breakdown lecture, I'm going to break down the trade that I took on the 17th of October 2024 during the morning session. I shorted the high of day on NasDaq. If you want to see the execution video, you can watch the upload which was released prior to this lecture. Here we're on the daily chart of NQ. What you can see on this daily chart of NQ is the following. I have annotated this daily CB right here, and this has been the most crucial price range for NasDaq lately. The reason why this has been the most crucial price range is due to the following. ES is currently making new all-time highs, whilst NasDaq is still lagging behind. As long as NasDaq does not displace above this daily CB right here and continues to reject it, I'm anticipating that we're continuously going to draw towards sell-side liquidity. This provided us with shorting opportunities during the month of September, right here already. And so far during the month of October, we have seen multiple shorting opportunities from that price range as well. What I want you to see is the following. If we go to the left and look at the month of July, what we can see is that we see a variation of the market structure shift pattern as I've been teaching it to you on my public YouTube channel. The market structure shift pattern is a key algorithmic signature that takes place inside of every single smart money reversal, aka in every single key swing high or key swing low formation. What I want you to see is that this low specifically right here formed inside of this BC on the left side of the curve. This low was then displaced through by this CB. Therefore, you know that this candle right here, this low, is a crucial level to monitor. Therefore, every single time that NasDaq gets repriced into that level, I can look for shorting opportunities from that level or from that area. And that is what I want you to understand on this daily chart. Before we dive into the hourly chart, I want to first share a clip of the daily review that I shared with my mentorship students prior to this day's delivery. Wednesday's PM session, but eventually today we saw the market open up and immediately begin to expand towards the upside, trading into this hourly CB which formed on Tuesday. What I will be monitoring is the following. I will be monitoring the reaction to this hourly CB right here. If we are going to see ES take out the buy-side liquidity resting above those highs, whilst NQ does not and instead rejects this hourly CB, then to me that would be a signature that confirms to me that we're likely going to see the market begin to expand towards the downside. But here comes the thing. Notice that I'm relying on ES rejecting those highs if it takes them out. That right there is a key algorithmic signature. If we would see NasDaq reject this hourly CB and preferably this hourly BC right here, which I had annotated, then that would be something I would like to see. But if we see no rejection at all taking place and we just see ES begin to expand above that Monday high, then to me I anticipate NQ to try and reprice all the way into this candle's low, because this candle's low was the London low of Tuesday, which we displaced through with that hourly CB. Now, that right there. You have just seen the clip from my review that I shared with my mentorship students during the London session of Thursday. What you heard in that review was the following. I shared with my mentorship students that I was looking for NasDaq to be repriced towards the upside into a premium of Tuesday's range. Meaning I was paying attention to this hourly CB right here and specifically this BC on the left here, which formed on Monday. And secondly, the London low, which formed right here. The reason why I was monitoring this range on NasDaq was due to the following. I was anticipating that ES would take out the Monday high, whilst NasDaq wouldn't. That right there is a Kraken correlation. That is what I was actively looking at in order to justify that we were likely going to expand towards the downside on Thursday. Meaning, my idea was that we were repricing towards the upside from the midnight open to trap people into believing that higher prices were next, reach a premium of the range of Tuesday, and then reject it, then dump it, so to say. Why? Because who has been making money all day since the midnight open? Longs, buyers. Therefore, we know that sell-side liquidity has been engineered, which we can attack. What you need to understand is that the SMT between NasDaq and the ES that originated during Thursday's morning session relative to that Monday high, right there was anticipated and called in advance. The whole delivery that took place on Thursday was literally shared within that review clip. And if you do not understand it yet, I would highly suggest you to watch it again until you do. Keep on rewatching it until you understand the logic that I shared with you and how I was able to trade based off that. Now, if we take a look at ES, what you can see on ES is the following. You can see that ES was repriced towards the upside, taking out Monday's high right here. This occurred during the New York morning session. Because that occurred whilst NQ created a lower high relative to that high, we anticipated that lower prices were next for the remainder of the day of Thursday. When I saw that Kraken correlation taking place, I knew that it was only a matter of waiting for the right time for me to go short, and then I would likely capture the high of day. When all these confluences are aligned with one another and the sequence of events is correct, this is the type of precision that can be achieved. If we then go back to the RE chart of NQ, what I want you to see is that I've annotated this downclose candle right here. This downclose candle, its respective low, was the London low of Tuesday. We displaced through that with that RECB. Notice that the downclose candle is a bearish breaker, where we formed a high, low, higher high, lower low. Therefore, we can anticipate that this downclose candle is going to function as resistance from price when price gets repriced into it. Now, align it with time, and you begin to understand why I was so confident in the fact that we would likely form the high of day in this area. If we then go into the 1 minute time frame, we can see my executions right here. What I want you to see is that between 7 to 8:30 am, the market consolidated. We went back and forth, back and forth, back and forth, because we were waiting for the 8:30 high impact news to take place. The 8:30 high impact news were the unemployment claims that got released. Whenever there's high impact news at 8:30 am, we can anticipate that they're going to utilize that to manipulate towards, for example, the upside in this case. Notice that from 8:30 on, the market was repriced towards the upside, trading into that early bearish breaker. What is so important about this price range is the following. The fact that from 8:30 on, we open up the second 90-minute cycle of the morning session. When that occurs and I see it open up and immediately run up higher, whilst my idea is that we're likely going to draw towards the downside, for me that is perfect manipulation that I'm seeing, and that is what I'm hunting, that is what I'm stalking, that is what I'm waiting for. So when I see that manipulation towards the upside taking place, all I'm waiting for is for the time to be right for the market to turn around. Therefore, what I was waiting for was the following. I was waiting for 9 o'clock to open up, reprice higher into that point of interest of that bearish breaker from London that formed on Tuesday. And I was waiting for key algorithmic signatures to take place at exactly 8 minutes past 9 to confirm to me that that was the high of day. I won't go in depth into those signatures that were present because I have some things that I'm not going to teach, and that's just something you need to accept, and it is what it is. What I'm teaching is already way more precise than what anyone else out there is teaching, so I hope you understand, and I don't want to put myself at more risk because what I'm already showcasing to you is insane how precise it is. Just wait until I show that to you inside of this trade. But with that being said, at 9:08 right here, we formed that high and I saw the confirmations that were required for me in order to go short the moment that a change in delivery state took place. We went above mean threshold 50% of the downclose candle right here. And when we did, notice that we then dropped below it, and that was the confirmation to me that we have formed the high of day and we were likely going to expand towards the downside. The market goes sideways for a bit, and we see it reject mean threshold right here of that downclose candle. After that rejection took place, you can see a CB get created. If you were not short yet where I went short, this was the CB you could have shorted of. And this is where I saw many people short of as well. Because this CB formed in advance of the 9:30 open. And because we're anticipating lower prices for that remainder of the day, because all of these signatures are in play that confirm to us that we have likely formed the high of day, what we can anticipate is that 9:30 will distribute. And that is what you see in my recording as well, where you see me literally type out 9:30 is upon us. I'm anticipating distribution to take place. Distribution being big downcross candles that would have to come. And look at the delivery that took place afterwards. After 9:30, the market dropped from 573 all the way to around 420 within just a matter of less than 10 minutes. Think about that. That's a drop of 150 points within less than 10 minutes. This right here is an insane low resistance liquidity run. And the signatures were already in play for this to take place from 9:30 all the way during the wallet session, because I shared in advance that this was exactly the move that I was anticipating and stalking if ES would reject that Monday high, whilst NQ wouldn't. Now, what I want you to see is that when we look at this delivery through the lens of 90-minute cycles, we can see that between 7 to 8:30, the market was literally going back and forth, back and forth, back and forth. This was that consolidation which I was referring to. Notice that I've annotated this row right here. I am not showing the full cycle from 7 to 8:30 because else I couldn't fit it all on this screen, on this slide right here. But what I want you to see is that we consolidated, we accumulated. We then manipulate towards the upside from 8:30, which is relative to that morning session. The second 90-minute cycle, which function is to manipulate. And we then begin the distribution cycle within that manipulation cycle. Let me explain that to you. What I need you to understand is that within the New York morning session, between 8:30 to 10, we're anticipating manipulation to take place. However, when we zoom into this delivery, what I want you to see is that if we fractalize that 90-minute cycle into 3 30-minute cycles, what we can see is that those 3 30-minute cycles all have their respective AMD function: accumulation, manipulation, distribution. What we can see is that between 8:30 to 9, accumulation is taking place. Between 9 to 9:30, the market manipulates towards the upside and it gets repriced into our point of interest, whilst ES is taking out that Monday high. We then see the signatures that we're looking for to confirm to us that the high of day has formed at 9:08. You can see that at 9:10, I went short and I literally typed out, I anticipate that the high of day is in right here. What we then saw was that the market was going sideways for a bit and we created this CB right here. This was a CB to short of if you weren't short yet, where I went short the moment CSD took place. And what I want you to see is that we reject mean threshold of that RE bearish breaker perfectly. Now, 9:30 comes along. And what do I anticipate from 9:30? Within my recording, you can see that I literally type out 9:30 is here. I'm anticipating distribution to take place. Distribution being big downcross candles to come because I was in a short position anticipating lower prices. What do you see occur from 9:30? 9:30 opens up and we initially reprice higher right here. This repricing higher isn't significant at all. What you can see is that we drop from 573 all the way to 420 within less than 10 minutes. Meaning NasDaq dropped 150 points within less than 10 minutes. Guys, I don't know where you're from. I don't know what your background is. But being part of a move that's so quick and so volatile, right there, that's a low resistance liquidity run. And that is what we want to see, where we are literally able to enter and we wait just for a few minutes or a short period of time, and then immediately the market expands in our favor. That's what I want to see. The first target for me, the first objective, was a new New York morning session low, meaning the low of 7 to 8:30 was my first strong liquidity. And why specifically that sell-side liquidity pool, you might be wondering. That sell-side liquidity pool is my first strong liquidity because who has been making money all morning until that point? Buyers, of course. The market went higher. Therefore, sell-side liquidity is being engineered below these relative weak lows and below these lows, etc. That is the first sell-side liquidity that I'm targeting. That's the market maker sell model for that morning session completed. What I want you to understand is that when we trade below that sell-side liquidity pool, the reaction to that low will be crucial for me to determine whether or not we're going to continue towards the downside. What we see is that the market expands aggressively below that level, and we see it draw all the way towards the lower end of that daily CB. Notice that when we reach the lower end of that daily CB, remember, this blue box is the daily CB price range. When we reach that lower end of the daily CB, notice that the wick just goes below it, but notice that the bodies keep on closing inside of it. We then see the market begin to retrace and it draws towards this CB right here. Guys, you tell me, at this point in time, from that key level, are there a lot of buyers which are stepping in that are making the market go higher and retrace? Or is it IPDA allowing a retracement to take place to trap people into believing that the low is in, to retrace into a key CB before continuing towards the downside because the draw liquidity is below market place? Of course, it's the second scenario. How else do you think that I am able to call these stops right here? Is it as if I know that a lot of sellers are going to step in? Is it as if I receive a call from some entity that they're receiving a lot of sell orders and therefore the market should go lower? No, of course not. The market is programmed to deliver this way based on time and price. And when they align, magic occurs. And I want you to investigate it. I want you to investigate what I'm teaching for free here on my YouTube channel. What I'm literally teaching publicly. I want you to go into the charts and investigate for yourself the logic that I'm showcasing to you. And it doesn't take long for you to realize that there's absolutely a repeating phenomena based on time and price. And then you will be able to gain a level of confidence in the things that I'm saying to you. And you will basically create a perception about the world that's completely different than the majority of people. Now, let's take a look at 930 for a moment. You might be wondering, why does the 930 reprice towards the upside and take out buy side liquidity resting above this high? Why should it? Why should 930 go higher once more? The high is already formed prior to 930. The high is already formed at 9:08 AM right here. During that 30-minute manipulation cycle within that larger 90-minute manipulation cycle. We anticipate that 930 is likely going to be utilized to distribute towards the downside. Now, what I want you to see is that because this distribution cycle between 9:30 to 10 for that 90-minute cycle of the second 90-minute cycle of the morning session, I'm probably losing you here. I know that it is confusing. I know that it might be hard for you to understand what I'm showcasing to you here, but I'm teaching fractals to you based on time and their respective delivery functions during specific time windows. And if you do not understand it yet, please just keep on replaying this part until you do understand it. But because we distribute between 9:30 to 10, what do we anticipate for that third 90-minute cycle of the morning session from 10 to 11:30? We anticipate chop. Why? Because the job has already been done. We already reached the key levels that we were meant to reach for that particular morning session. Surely we have one more drop lower after 10 AM, but that right there is not what we're after. What we're after is this sudden drop right here. This is the move that we're interested in. It's the most aggressive and volatile move within that period of time. Therefore, when you see 9:30 open up that aggressively and the opening range from 9:30 to 10 AM is so explosive, be mindful for trading the remainder of the morning session. Now, let's take a look at NasDaq and the Dow Jones. On the left, you can see the NasDaq, and on the right, you can see the Dow Jones. What I want you to see is that I've annotated the highs that formed at 8:30 and 9:08. The reason why I've annotated these specific highs is due to the following. What I want you to see on the left is that NasDaq creates that higher high relative to that 8:30 high. If we then pay attention to the Dow Jones, however, you can see that the Dow Jones creates relatively equal highs. The reason why this is significant is because when market 1 creates higher highs, and these markets are correlated for your info, meaning they should move in tandem with one another. If they're not moving in tandem with one another, it means that there's a Kraken correlation which is in play, which is SMT, which is taking place. When that occurs inside of our point of interest at the right time, to us that's the confirmation that we are likely going to change from buy to sell program. But because we see market 2 not create a higher high, but instead creates relatively equal highs, it's that SMT that we're hunting and that we're looking for. When that Kraken correlation was in play, I was anticipating that we were likely going to turn around, and that was one of the confluences used to frame this high formation right here. It wasn't everything that was used, because there's way more detail that can be found inside of this delivery, and that is what I invite you to investigate. Now, if we go to the hourly chart again, I have annotated this upclose candle, which formed on Monday at 9 AM. What I want you to see is that on Thursday, we repriced into that upclose candle with respective price range at 8 AM. Notice, however, that we rejected it at exactly 9 AM. We open up the 9 AM candle on Thursday, and we run up higher initially, and then we distribute towards the downside. This right here is a key algorithmic signature. This is TAPDA. I won't get into depth when it comes to TAPDA during this lecture. If you want to learn about it, you can go to the public lecture which I've shared on the topic. You can just search it up on my YouTube channel, and you'll be able to learn what this algorithmic signature is. But it showcases that time and price are in sync, meaning we are referring to the previous same time-based range, and we are likely going to see a rejection of that same time-based range. Now, if we pay attention to the PM session of the 17th of October, what I will do is, I personally did not trade this afternoon session because I was already done during the morning session. But as you can see, some of my mentorship students right here were able to participate in the move towards the downside. And I just want to kind of showcase it to you and kind of break it down for you. As you can see, there were beautiful shorts that were taken, and that is something that's a result of them understanding time, then price to a great degree. Now, if we go to this delivery right here, you can see basically the full daily delivery from around 9:30. I apologize for not being able to include more, but we really had to zoom out, and I wanted to make sure that you were still able to basically see the candles properly. But what I want you to see is the following. I want you to see that I shorted the high of day right here, or near the high of day. I was just off by a few points, but it's close enough, right, guys? Fair enough, right? But what I want you to see is that I shorted near the high of day right here, and we then expanded towards the downside. Then for the remainder of AM, we saw the market consolidate as anticipated, because between 9:30 to 10, we already saw a big distribution phase taking place. We then saw the market basically chop around for a long while, and during lunch, we ran up higher, trading into this sequence of CBs right here, and we took out the buy side liquidity resting above this high. We then saw the market form a high during lunch here. We then saw it begin to gravitate towards the downside. When we then opened up at 1 PM, what we saw was that the market initially consolidated until the macro from 13:45 till 14:15, or from 1:45 PM to 2:15 PM. What we saw was that the market ran up higher, taking out buy side liquidity resting above these relatively equal highs. We displaced towards the downside, and we again see the market stock shift pattern, where we form a low inside of a BC right here, and we displace through that low with a CB. We see the market retrace into that CB, and that was the PM setup for this specific day. The market expanded towards the downside, and what was the drawing liquidity? The drawing liquidity were these relatively equal lows that were the AM lows, the morning session, their respective lows. A market doesn't bottom like this. It really doesn't happen. When I saw the market draw towards those relatively equal lows, during that final 90-minute cycle from 2:30 PM to 4 PM, I closed my full position right here, and that was my final partial. All in all, I'm very happy with the trade management, and I hope that you are able to see this PM setup as well. It was a very textbook afternoon session setup based on time and price. And it was a beautiful day all in all to investigate and to look at, where there were shorting opportunities during both the morning as the afternoon session. When I exited my position right here, the market then began to retrace, and it basically began to consolidate going into the close at 4 PM. So with that being said, this lecture comes to an end. I hope that you were able to learn something from it. I hope that you were able to understand the logic that I utilized to basically short near the high of day. It wasn't the exact high of day, but it came close enough for a government precision, right? And I hope that you were able to learn something from it. If you enjoyed this lecture, please let me know in the comments. And if you would like me to create more lectures like this, let me know.